policy of reform, I mean, one officer, the same officer, looks after the income tax affairs as well as the sales tax affairs of a taxpayer. So then whether the report should be separate or one report, combined report can be issued, that need to be considered. Then the tax audit framework provides for minimum threshold on report. So these are the processes, and then out-of-pocket expenses will be 10% of fee plus actual outstation traveling cost if required. But there are certain limitations and exclusions, that what is not covered in the tax audit, what is limited there. Just I would like to explain those. Role of the tax auditor is restricted to provide information relating to the fact of the matter. This is very, very fundamental point. I would like to reiterate or re-emphasize on that auditor will not step into the shoe of the tax officer to interpret the legal issues. Its scope is restricted or limited to provide the information of the facts to the commissioner, and then that is subsequently that commissioner's job to basically turn that information into an order in acceptance or revision, amendment, whatsoever the tax commissioner considers appropriate. Then the tax auditor will not express an opinion on the issues emanating from difference of opinion between the tax department and taxpayers. What does this mean? Meaning thereby the legal interpretation. The reason or the logic behind this is that if I'm doing an audit of a company, I may have a particular interpretation or my own interpretation in mind on that issue. So I'll either be influenced by my own interpretation or I'll negate it. So in either situation it's not appropriate. So it's left to the tax department. Then audit of withholding tax compliances is outside the scope of the tax audit, except to the extent of the transactions verified by the auditor on test basis, because an expense is not considered to be an admissible expense if appropriate withholding tax has not been deducted. So for the purpose of verification of the transaction, one of the aspects which the tax officer or the tax auditor need to consider whether it is allowable or not is the withholding tax. So the transactions verified by the tax auditor, certainly he will examine that whether withholding tax was deducted or not, but besides that, he will not be required to carry out any exercise of withholding tax audit. Then, role of the tax auditor shall stand completed with the submission of final audit report. The auditor would not be required to present in person or furnish any information during adjudication, appeal, or any other proceedings subsequent to the submission of final report. This has been included after much debate with the FBR, because otherwise it would have been an unending situation that the tax auditor would have been called upon to represent or present in his in favor of his point of view before the appellate authorities, maybe commissioner, tribunal, high court, and then Supreme Court. So clearly the tax auditor's role will stand completed or ends as soon as the final audit report is submitted to the commissioner. Tax department shall issue an order either accepting or altering the tax return. The auditor shall not be responsible for the contents of the order except to the extent of the audit report. If the auditor's ultimate order by the tax officer is based on the auditor's report, of course the auditor is responsible for that piece of information included in the order. But if there is, for example, an interpretation of an issue, that is the job of the tax commissioner and he should do it. then the tax audit will be performed on test basis. Hence, the tax auditor would not be expected to uncover all cases of tax concealment or evasion. Again, purposely this is included that there will be materiality level. Tax auditor cannot, of course, say that he has examined the minor transactions, but he has not examined the major transactions. Therefore, if there is any concealment or understatement in the major claims, he is not responsible. Of course, when he will design his audit plan, or then he has to take into consideration the materiality level. But just to provide assurance that his role will be to the extent the transactions he has examined and he has considered appropriate for the purpose of an audit. Then, now what is the role of ICAP in this whole exercise of the process? Repeatedly, we are saying, and this is for the comfort of the membership and also for the information of the tax officers, that the selection of taxpayers is the sole discretion of the tax department. ICAP has no role. ICAP has neither any role in the appointment of any tax auditor. We have provided the information about the audit firms to the tax department, and then they have or they will be appointing the auditors out of those lists or the members. ICAP will certainly provide the assistance on technical matters for implementation of the tax audit framework to its members. And as Mr. Pervez Muslim said in the beginning, that we'll be carrying out similar, programs of panel discussions, workshops, and seminars in the different parts of the country to educate our members. ICAP will carry out investigation of any misconduct by its members, whether coming from FBR or maybe coming from to any other source to the knowledge of the ICAP. So ICAP certainly will put into the investigation process against the member if there is any evidence of misconduct by any member. So having said all is not very good, this is a beginning, I would say, and a beginning with a number of concerns and apprehensions, question marks. So the success of this program will depend on how it basically moves on from both sides. Not from but rather I would say there are four parties, I would say, in that: the taxpayer, FBR, tax auditor, tax consultant to the taxpayer. So these are the four stakeholders. So the success will depend on how the four stakeholders think about this process, accept and implement. So there are challenges. First, I would say, is the transparency and fairness of the selection of the taxpayers. So this time, I think 460 plus corporate sector returns have been picked up for audit through random balloting. And of course, it cannot be challenged. It is considered to be a fair basis of selection, but there are certain issues which we have identified to the member audit. For example, there are certain returns where no income was declared, nil income declaration. Those have been picked up for audit. There are certain returns where the only PTR income is declared. So as far as income tax is concerned, those are immune from auditing. And what to do with those returns? Or, for example, if you look at the cases selected, the computer has selected generally the medium size or small size companies, majority of them. So probably